Hello everyone, welcome back to CryptoVicious. Today is November 23rd, 2024, and we're diving into an exciting topic, the long-term outlook for Bitcoin. I'm thrilled to discuss where we currently stand in Bitcoin's 4-year cycle and what lies ahead. We've officially entered the bull market phase of this cycle, the third year in the 4-year pattern. Historically, this has been the most bullish period for Bitcoin, where the majority of gains tend to occur. This is what we've been waiting for, and today I'll break down why it's so important to stay focused during this phase. I'll talk about where we are in the cycle, where we might expect the peak, and address any concerns about an early top in this cycle. Our strategy here at CryptoVicious is simple. We aim to hold Bitcoin in a smarter way, taking advantage of the peaks and troughs of the cycle. We're not trying to time the absolute highs or lows, but rather avoid significant drawdowns and buy in as close to the bottom of each cycle as possible. This strategy has proven successful. A hypothetical investment of around $3,000 at the beginning of the 2018 cycle would now be worth over $1 million. This low-stress approach to holding and accumulating Bitcoin has been rewarding. Let's start by analyzing the weekly chart. Recently, we've seen Bitcoin break to all-time highs after a 7-month consolidation. Unlike prior cycles marked by intense volatility, we haven't seen any drawdowns of more than 30% this cycle. Every time Bitcoin dips 10 to 20%, buyers step in, which demonstrates significant demand for the asset. This demand is largely driven by spot buying rather than leverage, making this bull run more resilient and sustainable. We're now 2 years past the bear market low of November 2022, which marked the start of this 4-year cycle. In 2024, Bitcoin has begun a new bullish phase, much like previous cycles. Historically, around the 24-month mark, Bitcoin tends to break previous highs and enter the most speculative part of the cycle, the phase where substantial gains happen. An important difference this time is the presence of institutional and even potential sovereign interest, which is a level of demand that we haven't seen before. What's fueling this? For the first time, the US government has openly supported Bitcoin with pro-crypto sentiment in the administration. This favorable stance from regulatory authorities is giving institutions the confidence to dive into Bitcoin, fueling even more demand. Another major milestone this cycle is the approval of a Bitcoin ETF, which has allowed institutions to gain exposure to Bitcoin. This has helped push Bitcoin to new highs much sooner than in previous cycles. Unlike the previous cycle, which saw leverage-driven volatility, this one is underpinned by spot buying, making it one of the strongest and most sustainable bull runs we've ever seen. The key takeaway here is to focus on holding through the cycle. While short-term volatility is inevitable, the biggest gains will come from staying invested for the full duration of the bull phase. Historically, Bitcoin peaks about 35 months into the cycle, which would suggest a possible high around November 2025. However, this isn't a guarantee. The cycle could peak sooner or later. Now, some might wonder about taking profits along the way. While that's a natural urge, experience shows that in a strong bull market, selling too early can result in missed gains. Attempting to sell high and buy back lower can be risky. Bitcoin often rallies further than expected, and short-term pullbacks rarely present a perfect re-entry point. Instead, the goal is to ride the broader trend and capture as much of the cycle's gains as possible. If you feel tempted to speculate in the market, consider allocating only a small portion of your portfolio for that purpose. History shows that most speculative bets, especially on meme coins or small altcoins, underperform Bitcoin. Stick with the main trend and avoid overcomplicating things. Now let's address a few red flags. If Bitcoin were to close below the 10-month moving average, currently around $70,000 on a monthly basis, that could be a sign to reevaluate. But as of now, the fundamentals remain extremely strong, and we haven't seen any signs of a major reversal. In conclusion, this cycle is unfolding in line with previous ones, but with a new level of institutional support and regulatory backing. With such strong demand from major players, Bitcoin is positioning itself as a legitimate asset class that can no longer be ignored. This shift is opening the door for potential supercycle gains, where we could see prices exceed conservative targets. Some estimates suggest $125,000 to $175,000 as a reasonable target, though this number could rise if institutional FOMO continues to drive prices. Stay focused, avoid short-term distractions, and resist the urge to sell too soon. We're only in the early stages of this breakout, and we have a long way to go before this cycle's peak. Thanks for joining me today. Don't forget to subscribe to CryptoVicious for more updates as we continue to navigate this exciting market. Remember, this is not financial advice. Always do your own research. Thanks for watching.